Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar over the last 24 hours has managed to recover most of its losses for this week after rebounding off the lows of 71.90. And from there, the market is now looking back towards the top side of the range, which is currently around 73.15 after the bearish outside range day was challenged and rejected and still intact. I still feel from a technical point, due to the fact that the MACD is negative and the RSI does look like it's failing at this point in time, that the recent bearish outside range day is still valid. And I do anticipate we see a pullback to 72.45 and look lower, with the objective still holding at 71.30 to 45, where this base is here. The euro took a good challenge to the downside, but did break the level of 117.50, posting a low, I believe, of 56. The market is staged a slight recovery as the US dollar tumbles overnight. Nevertheless, we still need confirmation. I can view the pattern that's coming in here could be somewhat head and shoulders. We've got a shoulder, we've got a head, and we could be forming a shoulder just here. So any rally up towards 118.50, 70 area could be the perfect right side of the shoulder, and then wait for the break, which is around 117.5. We do get that level, then we are looking down towards 116 to 115 from the break. From a technical aspect, the term is sell into strength or sell the rally, as in any advancement should see that as opportunity, because from this shooting star confirmed by these hanging men, it does look like we should expect a weaker euro and a stronger US dollar. Do note the dollar index, which measures the greenback strength against a basket of 6 major currencies, is weighted to the euro at 57.6. And if the dollar index still continues to build on a bullish case, could see the euro fall further. Little to say when it comes to dollar yen. Going into the 9th trading day, this bearish outside range keeps the inside range as a consolidating pattern, and therefore eventually should see a breakdown, but a close under 105.90 is the key. And from the technical aspect, we've not quite got the full breakdown from the MACD, but we do somewhat have an RSI breaking down, and therefore should eventually see further risk to the downside, giving target around 105 with scope to 104. The pound, has it posted a hammer? Well, the market would need confirmation on that, and if so, we would need to see a break of this level here, which is around 130.60. If we do get that, then that would confirm the hammer and see it rally back to that 132.50, 70 area. There's a lot of work to do on the upside, so I do feel that it may actually fail and eventually head back towards 127.5. So with the pound recovering, so has euro yen. From the cross, you can see that there's a base coming in around 136.45. I do feel the market has to break above 138.80 to get any bullish implication from this candle, and therefore see a rally onto 141. But technically, I don't see that. I feel the market will probably fail like the pound and then eventually turn back towards the lows of 136.45 as its objective. Well, another day passes and gold is still remaining above 1,926. We still have not had a close to confirm the downside from New York. And once again, does put a slight threat to the upside, but I feel this candle here, being a gravestone doji, should keep the pressure on the downside. Now we close under 1,926. Target downside is somewhere around 1,900 to 1,880. Keep an eye on this though. If we do see the MACD eventually break above the 0 axis, could put a slight upstep. So at the moment, although I am calling it down, my view is getting somewhat a little bit weaker to the fact that it continues to fail at 26, which could give a little bit more influence for a bullish comeback. A good rebound of 36.5 for oil, but still needs to get above this level of 38, 70, 80 to get back in towards that rally of $40 to $42 a barrel. Let's see if the market has the momentum to rally. If so, then the bulls should come back in more force. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and enjoy the rest of the day.